Hi there. If you are new to my sessions, these are the key takeaways you can expect. I'll cover the Wyckoff stages, both current and near-term Wyckoff stages for Chainlink, and also the key price levels where Link will find support or resistance, plus any breakout timing that the charts are indicating to us. So let's dive into both the weekly and daily charts and see what's happening to Chainlink. So here we are at the weekly chart, and what we're seeing is post sign of weakness rebound. So last week the price of Chainlink showed us a sign of weakness around the level of the yellow key level of $17.10. That's a level lower than the sign of weakness back in January this year. So this time both the buying climax and the the sign of weakness are both one key level lower than the previous distribution cycle. So if we look at this buying climax back in December 2024, it was closing around the purple key level of $29.20. This time the buying climax closed at the blue key level of $26.10. So you can imagine the rainbow. Purple is at the top. Yeah, it's flipped, I know, not the usual rainbow that we see, but you know, immediate after that's the blue. So that buying climax becomes lower. Likewise, the sign of weakness. Last time it was at the green level, finding support over there. This time we are at the yellow level before the price rebound. So what we're going through now may be a last point of supply, the climb that we're having currently. So when next week or the week after, eventually when the price dies down again, going back to challenge the yellow key level or maybe going below it, that's the time this LPSY gets confirmed. So in terms of next Wyckoff stages, I already shared in previous sessions that this preliminary support, the very first stage within the Wyckoff accumulation cycle, has a much higher probability than the price going back to the upfronts. So given the market sentiments, I'll readjust the naming of it. Instead of an upthrust, that's probably just a second test. So let's be more prudent. The yellow scenario likely isn't the case because a lot of times during the PSY period, the preliminary supply of the distribution cycle, it will fluctuate horizontally for a while before it shoots up to the buying climax. That's why back then I put in these yellow tags. But over the past 3 weeks, it seems to have proven that the yellow scenario isn't the case. So it's time to remove them and focus on these next stages. So remember this white dashed line heading downwards. It's a declining peak resistance line. I've drawn this from May 2021, the upthrust of the distribution, to the buying climax end of last year, and also going through this year's buying climax just in August. As I shared in previous sessions, so if you're new to this, I was saying this isn't a positive trend. It's meaning a declining return of your investment if this trend continues. There are a couple of altcoins exhibiting this kind of behavior. So be careful if you see the buying climaxes, the distribution cycle peaks, getting lower and lower consistently over time. Okay, Chainlink is one of them. The downside, also there is like an ascending bottom scenario. So if this time when the price comes back down to an accumulation cycle, and the accumulation cycle end up somewhere above the red key level of $13.10, this trend will continue, and by the time we get into summer of 2027 or getting near the middle of 2027, that should lead to a massive decision point where a crazy breakout would happen if this is really trending like towards this very tip. Not that I see it going to happen that way, because the price can go below this yellow line, breaking it, and what happened on October 10th already proved it. It poked through this yellow dash support line just to find support. You see where it ends, right? Let me enlarge it. I know if you're watching on a mobile, it may not be easy. See where the line ends up. It's right around this white dash line, and if you ask what that is, that's where the top of the accumulation cycle was back in 2022 and 2023. That accumulation period that lasted for 539 days, almost 540 days. That's where the October 10th drop ended up at. So it's interesting, right? It ended up exactly at a point where the accumulation top was back in like 2-3 years ago. So these lines is still showing their effect. So back to the point here, if the drop this time, the reason of the drop is crazy as it sounds like what happened on October 10th, well, the big guys just need some news to push the price down, whatever news that is. They can still push it down to the accumulation level back in 2002, 2003, and that somewhere at the lowest point was below $5. Okay, that is still a possibility, seeing what happened on October 10th. Previously, when I shared my view about the white box, this long-term playground zone, a lot of people don't believe that would happen, that the price would go back to a level like this. But October 10th proved everything. Okay, now let's get to the daily, but right before that, quickly check the Bollinger Band Keltner squeeze. Currently we don't have a squeeze, but the purple lines are getting closer to the orange. So if we continue to see trading happening between the yellow and green key level, a squeeze may happen in the weekly time frame. If you come across this Bollinger Band Keltner squeeze indicator the first time, this this shadow patch at the back of these white candles basically tells us a squeeze was happening. And what's after the squeeze is bigger price swings. We're still going through that wave. This is just the first wave. The second may be lower, but if we get into a squeeze, that means the bigger waves can still continue. So last time it happened was back in November 2024. You see how the swing happened, right? The bigger waves and then smaller waves. They happen one after another. But it's not always swinging to the upside first, okay? Remember that. Sometimes it can swing to the downside before the price stabilize and then like go through another squeeze period and then swing again. Let's go to the daily. The previous squeeze, we're going through a post-squeeze period where we've got mild fluctuation this time, because that squeeze over there is triggered by the October 10th event, not by the previous horizontal trading trend. So this is kind of an outlier situation for this indicator. So as of now, we don't really have to worry about like a squeeze coming. But then, of course, these kind of black swan events can still happen outside of any like technical indication, because these indicators, they track regular or ordinary trading behaviors, not these kind of outlier events. So be mindful if you're trying to use some of these indicators. So back to the Wyckoff in the daily time frame, but so they are at different stages, the weekly and the daily. Previous sessions we talked about the potential stages would be preliminary support and selling climax for the accumulation cycle. As of now, the price is still way above the previous accumulation cycles. The previous ones back in June and also March, April time this year was below the orange key level of $15.20. Currently, we're still way above it, so I don't think we are there yet. So we're still going through the late stage distribution cycle. We have seen an LPSY on the 14th, just the past Tuesday, and then now we may be going through another LPSY. Okay, that's for Wyckoff. The trend is still going down, meaning still heading towards the accumulation cycle. It's just a matter of time that we'll see where the selling climax will end up being at. And this downtrend over here, we see multiple occasions. Okay, if we want to exclude this outlier event, like a week or so ago, almost 2 weeks now, what happened in the past 3 days showed us that's not what it is. So it came down below the bottom edge of the trend box, went through the yellow support key level, $17.10, and then reclimbed back to the center line and then got rejected, much like what happened on the 13th and 14th. So what I'm going to do is, instead of gauging whether we are going through a steeper decline, it looks to me we're still at similar rate of decline, just that the price range has gone wider. So the lows are getting lower than the previous lows. So one way to do it is to expand the channel box. The center line can remain at its position because we are seeing the center line is still showing or indicating to us the correct range or price level that the candlesticks or the price are showing rebound. Yeah, just to make it like this. So meaning the previous lows aren't hitting the bottom edge, but it's fine because we are trying to look into more recent price actions. And for both October 11th and October 17th, they were both hitting these spots, and I should actually extend it further because most more important are the wicks, so we know how extreme the prices can get to. Now we have to adjust the center line. Again, the principle is it has to cut through the most candlesticks tops or bottoms, like heads or tails. So you see these bunch of candles over here and multiple around here. So these were the ones I'm talking about. So many, like almost most, it's not almost, it must be the one line that cut across the most candlesticks, head or tails, other than like the ceiling and the bottom. So it looks to me the ceiling is too far away from the tip of the candles. So let's address that. Now it looks good to me. Okay, we've got these bouncing off the edges, and currently it's still looking fine. And once we've got the slope adjusted, it's time to extend it so we know if there are any potential breakout time points. So we're still far from that particular point in time, if the box is really crossing the yellow, somewhere near the end of November, assuming the price is still trading between the green key level and the yellow key level, eventually the price will enter this particular triangle. So that's when the price breakout would happen. If it breaks to the downside, that's not something that's too alarming, because we know the price is or has been trading within this downward channel since late August. So that's scenario one. If it breaks outside of the box, or the bull flag in candlestick pattern analysis terms, that means this downtrend is taking a pause, or you can say it's over. Not that the price cannot go out, show some sign of like horizontal trading, and then start another downtrend. That can happen as well. Just that this channel box is over, and we may have to observe another trend. So that's the key, trying to extend these to see where it's heading. If you say, what if Chainlink is more bullish by then, meaning the price goes above the green key level and trade along this line, that means the same scenario. Either it breaks towards here, that time it may challenge the light blue key level of around $22. Okay. The other side is just the same downward channel that doesn't or hasn't changed. So as of now, immediate breakout situation outside of the channel, there's none. It's still far from there. Both upside and downside of the channel, there's still much room for the trade to happen. From the current $18.70 to $20.80 to the upside, and downside it can go all the way to $13, $14. So it's other than the key levels where we can see price rebound, those are the bottoms that the price can reach if some event like the October 10th happened. Okay, that's all for Chainlink today. Thanks for joining me. See you in the next